Greetings and good morning. So, what if I told you that not everyone needs insurance? And what if I also told you that insurance companies are betting against you every single month? Obviously, as the topic implies here, we're talking about insurance. Insurance is one of those things that everyone is told to get. But what everyone is not told, an uncomfortable truth, is that most people don't even understand what they're buying. Many people overpay for insurance and have insurance they don't need. So, for today, let's break this down a little bit. What insurance really is, when it makes sense, when it doesn't, and how to protect yourself financially without overpaying for coverage you're probably never going to use. So, what is insurance really? At its core, it is a risk transfer. You are transferring the risk of a problem, and you are paying someone else, in this case the insurance company, to take on that risk, that financial risk. And you pay a premium. In exchange, the company promises to cover you if something bad happens. But here's the thing, they only stay in business by collecting more in premiums than they pay out in claims. That's the business model. So from day one, the odds are stacked in their favor. So the insurance you probably do need, let's get this out of the way. Despite skepticism, some insurance, as if you've lived this long, you know there's some that's just, it's not negotiable. Financial consequences can be quite devastating, and there are requirements by law. So health insurance. Medical bills are the number one cause of bankruptcy in the United States and in many other countries. A single accident or illness can cost six figures. You need this. If nothing else, get some catastrophic coverage. Auto insurance, talking about legalities. If you drive, it's often legally required. But even beyond that, one accident can ruin you financially for years. Liability coverage at a minimum, and consider comprehensive if your car is valuable. Homeowners or renters insurance, another one of these, because this is your biggest asset. Even for renters, this is probably everything you own. If disaster strikes, fire, flood, theft, the coverage protects your shelter and your belongings. So renters, don't you skip this either. It's, for the most part, it is affordable, and compared to the value of your property, it's worth it. Term life insurance, this will go back and forth, whether or not even term life insurance. When it is recommended is definitely if someone depends on your income, like a spouse and especially a child. You really need to have life insurance in those cases. But be smart with your term life, not whole life. Again, with whole life also, there's some back and forth on that. I'm not going to go too deep into that one. But term is cheaper and more efficient for most people. Insurance you probably don't need. Whole life or universal life insurance. They're often sold as investments. But for an investment, they're expensive and complicated. And overall, their returns are extremely low. If you get term life and properly invest your money, It almost always beats whole life in the long run. Pet insurance. Unless your pet is prone to expensive medical needs, just you would be better off just creating a pet emergency fund. Remember what we talked about back in budgeting. Create a separate account just for your pet and allocate a small portion to that in your budget. That way, if something does happen and you need to have emergency, it's there for you and your pet. Extended warranties. I don't know if I've ever really purchased an extended warranty, maybe for really expensive items, but for the most part, it's statistically most people never use them. They're sold as insurance at the checkout, but the people that use them, it's the benefits and the hassle of getting those benefits. It's just you get much more of a runabout. So skip it, save the money. Phone insurance. If you can afford to replace your phone in an emergency, skip the coverage. Again, this is going to go back to, we'll cover a little bit more, but stuff we talked about, your emergency funds. What do you have? Your 3 to 6 months of emergency funds, or more if you can get it. It's just, it can be worth it, but it's not necessary in most cases if you are good with your budget. So self-insuring can be smarter in many cases, but not in all. Self-insuring just, it means having enough money to cover your emergencies or your losses. We talked about that with savings and emergency funds. Go back and watch that video if you haven't already. So instead of paying a company to cover you, pay yourself. Cover yourself. Instead of making somebody else rich, make yourself rich. So when does this make sense? To self-insure. When you have a strong emergency fund. 3 to 6 months of expenses. More if you can do it, but aim for that. You've built up a savings for a targeted savings, specifically for replacing your electronics, your phones, your appliances, maybe even your car. And you're not emotionally or financially panicked when something breaks. If your car breaks, your TV breaks, and you just pull your hair out. Okay, this wouldn't be the time for you. But go back, as I've talked about. Go over the emergency funds and the savings. That's the seeds you need to be planting first before you even get to this. Self-insuring gives you freedom, and as we said, instead of paying into a system, making profits for somebody else, making somebody else, a corporation, rich, you keep your money. You're in control of your money. But that also means you're in control and you're responsible for your money and everything, instead of paying somebody else to take the blame for it, paying somebody else in the hopes that this random company is going to have your best interests at heart. So, how do you know what you need? 3 simple questions we'll start with. Ask yourself, can I afford to replace this or recover without insurance? So again, if you have an emergency fund, 3 to 6 months, and whatever breaks, you can cover it with that, you don't need insurance on it. If you've got 3 to 6 months worth of car payments, okay, maybe. But maybe you need to get your car insured. instead of getting a new car. Home insurance, obviously, you're not going to have enough in 3 to 6 months to replace an entire home. Another question, am I protecting my income and my dependents? And here in America, at least, is this insurance required by law or by a lender? You might want to start with that one first, obviously, and work your way out. So insure only what you can't afford to lose. Kind of a golden rule, if you will. So if you have a $700 phone that breaks, $1,000 phone that breaks, that sucks. But if you set up your emergency funds and savings, like we've previously discussed, it's a hit getting a new one, but not that bad. But what happens if you have a $70,000 to $100,000 hospital bill? That's a financial crisis. So ask those questions, look at those things, and do those calculations. Remember, you're supposed to meet with yourself at least once a month, or meet with your family and talk about this. What can you cover with your savings, your emergency funds? If you can't, get insurance for it. Now, nothing says that if you get insurance for it now, you build up your emergency savings, go back and cancel that insurance. Save yourself some money. Put the money you are putting toward your insurance into this emergency savings fund. Stack that out even more. Try to get to a full year. So, shop for insurance. Shop like a pro. Shop around. Compare at least 3 providers. There are so many websites out there. It pretty much does it for you. Use independent brokers if possible. Know your deductibles. Know what you can afford. Higher deductibles means what you're willing to pay out of pocket, the lower your premiums. But make sure you have cash on hand to cover them. So again, this goes with your budgeting, your emergency funds. If you can have your auto insurance, if you can have a much higher deductible, most people are going to probably do $250 to $500, maybe even $1,000 deductible. But if you have built up your savings and emergency funds, then you can qualify for a much lower premium. Bundle smartly. Auto, home. If you still have a home phone, some of that comes together. Your cable, maybe all that comes. But don't bundle blindly. Make sure it actually saves you money. Do the calculations yourself. Run through your budget. Run through what this company is providing and make sure it works. And last but not least, the thing that sucks, the thing that nobody wants to do, nobody ever does, read the fine print, especially for your exclusions and cover limits. Read it. Review it once, maybe twice a year, so you understand what your requirements are and what the requirements of the insurance company are, what their expectations of you are, and what your expectations of them should be. So, understanding overall, insurance it's a tool, like any other tool in your financial tool bag. It's not a safety blanket. Use it to protect against disasters, not just inconveniences. Take time to understand your risks, your real risks. Once you understand that, once you've budgeted and understand when you can assume the risk, you'll spend less and you'll worry less. And you'll, in the long term, build a much stronger financial basket for yourself. And remember, The less you rely on insurance companies, the more you take back your control over your life and your money. The less you are paying somebody else to take that risk, the more control you have, but the more responsibility you have. So, as we've talked about before, your money should work for you 24/7, 365. When you give your money to somebody else, it doesn't work for you anymore. It works for them. So pay attention, review your budget, have your monthly or bi-weekly meetings with yourself or your family. Understand what you're getting into. Assess when you need insurance and when you can take the hit personally, because you've already generated an emergency fund and savings. Thank you for watching. Have a wonderful day.